Hi all, thanks very much for joining us for another series of Trading Outlook. This is the June Trading Outlook. I think it's quite an interesting one with the volatility we've seen post-elections and last week with elections. If you guys don't know me, my name is Brett Eve. I'm the PCM at IG. I want to say thanks again for Andrew for another series of a Trading Outlook. Without further ado, Andrew, you can take over.
Thanks very much, Brett. Much appreciated. Just take note of the disclaimer quickly, and we'll move straight on into things. Got quite an action-packed session today. I've entitled this Tighten Up the Stops. There's a possibility for a short-term chop that could be around the corner, and I'll explain everything to you. As always, we base everything off a couple of moving averages and then pivot point analysis. If you don't know what a pivot point is, just type in Google, what is a pivot point? It'll give you a brief breakdown what pivot point trading is all about. It's pretty simple stuff, and that's what I like to incorporate into my trading and analysis, just to keep it nice and simple. All right, so just the presentation format quickly. As always, we just go over this. We'll just look at the indices and commodities and the stock performances for 2024 thus far. We're going to take a bit of an in-depth look at seasonality. In the last presentation, we looked at the 1986 analogy, and then also we'll take a look at sort of comparison to 2019, and then sort of put together some sort of roadmap with regards to what could occur in the next couple of months, and then also looking out towards the latter part of the year. We'll also take a look at the Magnificent 7 stocks, and then the top 3 stocks that drive the top 40, Anglos, Richmond, and Naspers. Then the all-important NVIDIA, we'll look at that on a daily chart as well as an hourly chart. We'll also delve into the S&P 500 and the 40 hourly chart, also just to highlight a couple of things there. And then also we'll take a look at the NASDAQ chart, that's heading up into a solid resistance, which is the R1 yearly pivot point. And that could possibly start to cap equity gains together with some Elliott wave analysis, which we'll also delve into. Then we'll review the stock ideas from last month, and then also look at the new stock ideas. So for our performance for 2024 thus far, and some trend analysis, not much has already changed. Bitcoin, it's leading the charge with a gain of 60-odd%. Had a good rally last month of 11-odd. And then gold and the tech sector and S&P 500 put in a good showing last month, and that propelled those up into the top of the ranking tables. And then really just a case of our resources, they're up 7%, but then our top 40 overall flat on the year, financials being dragged lower, and then palladium continuing to bleed down 16-odd%. So really a case of S&P 500, Bitcoin, and Nikkei leading the upside, with the top 40 and our financials and palladium on the downside. And from a trend perspective, not too much to really write home about here. All the trends are generally in the medium and long term to the upside, with the exception really of China and the Kospi, and then probably Nikkei, but that you probably find that has moved up since I've done this chart. So it's just really a case of the shorter term trends are probably presenting a bit of a pullback, and we'll have to just keep an eye on these heading into the end of the month, maybe into July. If prices start to fall below the 50-day moving average being the medium term, that could indicate a deeper pullback. But for now, it seems like the momentum and trend is still to the upside. But as I mentioned early on, we will get to, I think that there could be a possibility of a short-term top starting to brew. So now seasonality, we mentioned last month, we said seasonality hasn't really worked that well during the course of 2024, and that while there was an expectation for a seasonal dip in May, we alluded to the fact that just be cautious, and that might not be the case based on that 1985-1986 roadmap, and also the fact that seasonality hadn't really worked. And we saw this big aggressive move higher of 4.8% move to the upside of the S&P 500. So the seasonality didn't really work out. Begs to be seen if we are going to follow the seasonality in the next couple of months. But I think what's important to keep an eye on here is that you'll notice that even with the seasonal pattern, that June and July tend to be relatively flat. So maybe volatility starts to increase, and you actually see sort of flat to weaker price action in the next couple of months. Then this just really highlights exactly this. This is the price action over the last 21 years from 2003 to 2023 and the election years. And you can really just see that any gains are front loaded. And then before we see sort of sideways to lower action, we do have over here on the 12th, the inflation print out of the US, as well as the FOMC. So look, generally speaking, it looks like again to be front loaded and sort of grind lower, maybe a little bit of a kick towards the end of the month. And this is another chart that we highlighted, which was quite interesting and sort of actually set the stage quite well in terms of what May was going to look like. I'm not going to go over it again, but what was really what we were suggesting here is that momentum, or if you saw negative April, which we did see in 2024, it was a case of you're going to start to see the likelihood of May being positive and then June being positive. So that could be quite interesting that even if we do see some choppy action, maybe June start to eke out a bit of a gain before a big drop into July, and then volatility before a year-end rally in October, November, and possibly a little bit of weakness creeping into December. But based on all of this information that we suggested or put forward, this analog, that the 12 months after that showed a gain of 22%. So what this is really trying to say is that momentum still favors for gains to be extrapolated out into towards the end of the year, but we should start to begin to see some volatile, choppy action. Not to say that you can't get some good trading opportunities off this, just be aware. I think volatility should begin to tick up in the next couple of months. So then again, this is the chart that we highlighted, 1986, 1987 comparison. We were at this sort of area, and you can see the kick higher to make new highs. Where we are now, maybe a little bit of a pullback, move to new highs, and then it'll kick towards the end of the month. And then this is July, which should potentially highlight some caution is warranted with a deep pullback. And then we'd want to try and monitor for a move into this 50-week moving average. And that could provide good support for a possible rally into the end of the year. This is a weekly chart. And then if we just go and look at 2019 as well from a fractal perspective, you can see that if you compare 2019, it almost lines up quite perfectly. Break to new highs, a little bit of a pullback, another push to new highs before a pullback in July, a bit of volatility before another move, swift move to the upside come the end of the year. So if you put those 1985, 1986 and in 2019 and overlay all of those, you could get some sort of a roadmap which looks like this. So that was that circled area that I highlighted on the weekly chart when comparing that analogy of 85, 86. We've got the move higher, a little bit of a dip. We've pushed now to fresh new highs, maybe a little bit of a dip, move higher into the end of the month, and then this is where we could start to see the short-term top start to brew. We'll follow on with regard to this short-term top and with a bit of Elliott wave analysis and also some pivot analysis, and that will sort of create a better picture in terms of why I think that top could be dipping. I think it'll be a longer-term top. I think it's just a short-term top, given the fact that I believe that it's still the case of the dips, and there will still be momentum that will carry us higher into the end of the year. But expect this volatility. Maybe we trade back down towards 5,000 on S&P 500. Bit of a bounce. Maybe we go an event go and break 5,000. This is where that 50-week moving average might sort of come in. That provides a bit of a platform for some support to come in, and we start to average in the end of the year and the seasonal bullish move to the upside. So that's how I think sort of the second part of the year is going to unfold, but be prepared for a possibility for short-term top in June and then July, some added volatility and a move to the downside, which could potentially move towards 5,000. Then this is just another chart just suggesting that momentum does still favor, on a medium-term view, does still favor the bulls. This, I'm not going to highlight too much on these two columns. This column is where we're at the moment. If January to May is greater than 8%, so that the cumulative gains from January to May are greater than 8%, this is what the June return will be in all those occurrences. And you can see that up down is 14 versus 3. So there have only been 3 occurrences that have seen weakness during June. So in theory, based on probability, we should maybe eke out a bit of another gain in June. But as I've been suggesting, degree of caution warranted because this could start to mark a short-term top. Then drilling into the Magnificent Seven, you can see that if we just look at those top 5 stocks, Amazon, Apple, Microsoft, Google, Nvidia, they've accounted for, if you add equal weight of each of those, would give you a 27% gain, which translates into an 11% gain in the S&P 500. And if you strip those out, the 495 other companies have only really seen a 6% gain. I saw a stat the other day that said that of the S&P 500 gain, Nvidia makes up about 40% of the S&P 500 gain for the year thus far. So it's quite crucial to actually keep a good watchful eye on Nvidia on a daily and even drilling into an hourly chart, which we will do a little bit later. We always just look at this from a trend perspective. Just the short trend is the 5 EMA above the 15 EMA, is the 15 EMA above the 50-day moving average, and then the returns is above the main monthly pivot point in terms of price. And you can see that last month we did suggest that momentum looked like it was starting to roll over, but a lot of these stocks did manage to actually pull up their socks, so to speak, including Nvidia, which back of solid earnings continued to climb higher. I think that boosted sentiment to drag a lot of these other stocks higher. So where you are now, there's the 27%. You just had an equal weighting in all of these Magnificent Seven stocks. Quite interestingly, is if you just stripped out this gain and then you had an equal weighting in the remainder of the stocks, you'd only be up 9%. So it just shows the big weighting that Nvidia does have. If this is just a small sample size, and then you translate that into the S&P 500, what I said, like 40% of the S&P 500 return has come from Nvidia. You can see this highlights it quite nicely. So it's only really Tesla and Apple that are sort of dragging this group of stocks lower, but overall an equal weight in that you'd be smiling handsomely, but you needed to make sure that you did own Nvidia. Strip that, only up 9%. Generally speaking, momentum is still pretty good, but we do need to just keep a watchful eye on this, and specifically on this Nvidia stock. We shift tack towards the top 40 and the performance for the top 40 stocks thus far. Multi-choice just corporate action there, and then we also Anglo American, which also had a bit of corporate action, but that's now dissipated, hence the 5% decline over the course of the last 30 odd days. Then Naspers and Prosus, they've seen good gains of 10, gaining quite nicely, and then price, then Richmond, that had a good run during the last month with a 10%, and that sort of boosted it into the column. Then on the downside, Sasol still really battling. Even last month, we said that this is a stock you probably want to just leave alone on the long side, despite calling it in the prior month that. But that's down 38%, not looking too great. Platinum stocks continue to battle, and also that restructuring and potential corporate action out of Anglo American. We saw the likes of Kumba and Amplats come under a bit of pressure. MTN continues to really battle, down another 10% last month, bringing the gains of sort of negative 27%. And that earning update out of was down 8%, and then down 23% for the year thus far. So a bit of a mixed bag. these stocks, the Sasol, Anglos, and MTN, continue to underperform, whereas the likes of some of the golds and Naspers continue to outperform. So if we just drill into the likes of Anglos, Naspers, and Richmond, the big heavyweights make up the top 40. We just do a brief synopsis in terms of where we thought things were going last month, and then sort of see how things panned out. We suggested that sort of with his corporate action swirling around with BHP, it was really a case of range between 600 to 640, and a break of 650 was needed to target 700. And that's pretty much what did occur. We saw 600 holding, some lower highs that started to form, which provided an opportunity for the sellers to eventually go and tag this missed pivot. A missed pivot is when price action has failed to tag the main pivot point for the month. You can see towards the end of the month that was tagged buyers began to surface. We do have a downside target which coincides with the main yearly pivot point around $550. So whilst the price is below 603, I think it remains a case of selling the rallies. And things do get a little edgy. There is this gap down at about 515, which could be full. But seems a case of selling the rallies for now. If price was to hold above 603, might 640, 650 come back into play. But it does seem like maybe the short-term range is 550 to 600, and then that 550 starts to give away. That could result in further weakness and close that gap around 515. Then Richmond, we've been going on about this falling wedge pattern and suggesting that the 200-day moving average, this red line over here, that was providing a bit of support. But we said that while price was below the 15 EMA, and it did look like there was a small head and shoulders brewing, and there was a possibility that we go and head down towards 25.50. And only if price was able to get above 27.20, might the bulls be back in charge, and then this bullish falling wedge could begin to play out. And you can see that was really the one day that resulted in further weakness. There wasn't any follow through, and then price managed to climb back up, regain that 27.20, and then this was sort of the hint that perhaps earnings are going to be a bit better than expected. When you've got consolidation above the yearly pivot as well as the main monthly pivot, and then we got the pop higher, a bit of a reset, and then now I've seen price trade even higher through the 31.10 R1. It's possible we could even head towards 32.40 and maybe even 3,300, which I would expect this sort of area to provide stiff resistance. And maybe if you are looking for a counter trend short, that would be the area to short into for a reversal, and then play a move down some of these bits. But overall, you can see the 5 EMA being this red line and the 15 EMA being the black line. That's provided a good indication with regards to short-term trend. You can see here when the 5 EMA crosses above 15, that provides the buy, the sell, the buy. So if you're looking for a medium-term short, you would need to see this 5 EMA start to roll over below this 15 EMA for the next move to the downside to occur. But for now, the trend is up by the dip stance. Maybe only if we get up towards this sort of area, might sellers start to be a little bit more aggressive, and maybe even create a bull trap with a move through that high, suck in the bulls, and then split out with a move back down below 3,200. In Naspers, we were suggesting that this one was looking pretty good. We just needed a reversal, and that would set the stage for a move up towards 38.20 and this inverted head and shoulders pattern. And then we also say that there's a possibility if 38.20, if there was a reversal, that could provide a little bit of a dip lower, and sellers might begin to enter. And you can see we've got the reversal, perfect move up into R1. We got the reversal from the R1, but there wasn't really much to take advantage of if you did short. And as soon as that R1 was taken out, a move up to R2 And you can see when you get pivots that line up with the yearly R2 and then the monthly R2, that provides a probability of a turning point in the stock starting to increase. And then you can see that provided perfect resistance, a stock grinded lower. And where we are right now, we think we are trading just above this pivot point. So it does give the bulls a slight edge here. And maybe we do see another leg to the upside to form the fifth wave. So maybe another move up in towards 4,000. And if that's overcome, who knows, maybe a little bit higher towards 42.60. But I kind of get the feeling that any bounce to form this fifth wave will just be a slight high. Maybe we fall back down again. If price does start to move back down below 38.24 and a couple of sessions starts to close below there, then I think that the likelihood of a move towards this missed pivot around 3,500 and 3,550 that could increase, and that's probably where buyers could come back into the mix. So maybe just monitoring the 3,500 to 3,550, and then also a break around sort of 4,000, and those might be sort of the range in the short term in the next couple of weeks ahead. The all important here. So over the last couple of months, we were calling for this ABC type corrective pattern, and then suggesting that maybe that was the fifth wave that had played out. But it seems with the price action having regained this main pivot point, and then also that 920 that we talked about, sorry, the 892, got confused there, the 892 that we talked about, the moment that was regained, that increased odds for a fifth wave to the upside. And now I've seen this fifth wave to the upside with earnings that were better than expected. But what is a little bit worrying here is that you do have this wave 5 or 5 now, which could indicate that you're going to start to see momentum slowing to the upside. You can see 1, 2, 3, 4, 5. And in the bigger count, this would be wave 5 or 5. So it looks like there is a possibility that this R1 around 1230 that could potentially cap gains and then bring about some sort of corrective action. And who knows, maybe we move back down towards the bottom of this wave 4 or this main pivot point around about 1030 sort of region. But if just keep an eye on the stock split that is occurring on Friday or Monday. Maybe there is still a little bit more momentum with regard to the stock split that's coming up. If we drill into the hourly chart, you can actually see it quite nicely here. So this is the 15 EMA being the black line, the 50 period moving average on the 1 hour, that's the blue line. And in hindsight, it's actually been pretty easy. It's really a case of you just buy when there's a crossover and you just hang tight. You've been a buyer at 840 and you're still long. So the key really here is that you need to, if you are looking for a short or if you are long NVIDIA, or we need to just keep an eye on this with regards to sort of the greater market potentially rolling over and sort of sucking sentiment and souring sentiment, should I say rather. We need to see this on an hourly chart, the 15 EMA roll over below the 50 EMA, and that could indicate maybe a deeper pullback. Again, you can see that we've got this 1, 2, 3, 4, 5, and then within the 5, we've got another 1, 2, 3, so maybe a little bit of 4, and then 5. So that would complete 5 of 5. So you can see a lot of this Elliott wave stuff that's getting to the top of or the climax of these wave 5 of 5s, which does make me a little bit nervous on the long side, and it's possible that we could start to see some exhaustion occur out of NVIDIA and spill over and sour sentiment for the rest of the tech sector. Take it a step further, if we just go and look at the broader NASDAQ, this is a weekly chart. So we've got a weekly chart over here, and then these are yearly pivot points. So you can see that we are bumping up towards R1 on the yearly pivot point for the NASDAQ. And then if you just keep in mind what I said about NVIDIA, it is interesting that we are starting to see a NVIDIA which could potentially be on a wave 5 or 5. And then you couple that with the NASDAQ heading up into stiff resistance around R1. It's possible that we could start to see price stall I'm not saying it's going to tag R1 and then just roll over. You can see on prior occasions that we've seen a bit of an overshoot, but it's pulled back into the R1, which has acted like a magnet to price. And you can see again here, maybe an overshoot pulled back. And if there is any overshoot, don't try and follow it, because it probably is going to pull back. So it's a case of, based on history, case of any overshoots probably could attract some selling for eventual back to that R1. And also, notably, it is a round figure. See over here, round figure 15,000, round figure 15,000, 19,000. Also, the main pivot point around 15,000. So interesting that it also coincides with that round figure. So again, a case of be careful. Overshoot will probably attract sellers and be another bull trap. Another warning sign for the overall market, I would think, the general tech sector. Then if we go and take a look at S&P 500 on the May pivots, we suggested that there was a possible bear flag and that the character of the market had changed with the 15 below the 50. So momentum was starting to shift. We also had the 5 EMA below the 15 EMA, and then we also had the price action expecting the underside of the 50-day moving average. So we were looking for some sort of bearish action to play out. The caveat here was that if price was able to regain 50.83 and 51.20, that would reinstate bullish action and maybe move towards back up towards the prior highs. And you can see that there was no follow through to the downside. We managed to gap up through the 50.83 as well as the 51.20. And you can see that once price was back above the main pivot point, that's indicated that you needed to be bullish. Another bullish aspect was the 5 EMA started to cross back above the 50 EMA. Momentum had shifted to the upside, and you can see the 5 EMA with above the 15 EMA still indicates a buy the dip scenario. However, we get back to this Elliott wave. We've got 1, 2, 3, 4, and then this looks like we're getting this fifth wave to the upside. You could argue there's a 1, 2, maybe 3, 4, and then maybe a stretch into this 5400, 5410, 5440 sort of region. The R1 and then the R2 yearly, they line up between sort of 5410 and call it 5440, let's just say. So this is sort of the area I would think, putting everything that I've said together in the last couple of slides, looking for a short-term top. This is the sort of top I'm looking for. And then maybe we start some sort of corrective action, which could result in a move back down to the bottom of wave 4, which also coincides with 52.10 main pivot point. So if I'm correct in this analysis, we should get some sort of ABC corrective action. Now, it's a year, but you said that June is probably positive. So what happens is maybe we sort of chop around, put in a bit of a positive June, and then maybe only we start this corrective action come July or towards the latter part of the month. Maybe a bit of consolidation, and then who knows. But just be aware that chasing at these sort of levels is probably not a great idea, and corrective action could be quite choppy before the eventual full lower does occur. The top 40, we were looking for some sort of pullback towards this main pivot point around 69,000, and we suggested just on symmetry that that was likely. We did say so that if there was consolidation above the yearly main pivot points, that would be bullish for move towards 71,500, and then 73,700, I think it was, where there was a gap on the left of the chart, which is not shown here. And that is what happened. We didn't actually get that bearish move. It's a case of we did get a consolidation, a couple of days, 1, 2, 3, 4 days of consolidation above the main yearly pivot point. And in hindsight, I suppose, looking back at this is a nice rounding bottom formation, and then the consolidation above that breakout, sorry, excuse me, resulted in a target of that 73,700 sort of region come into play. R2 monthly resistance, that gap gains and or a sharp fall lower into the end of the month. Where to from here? The 5 EMA is below the 15 EMA, but the medium-term trend is still to the upside, or the 15 above the 50. But the 71,400, I think it's a case of you do need to be quite careful. Only once 71,400 is breached on a closing base, might bulls be able to flex their muscles back up towards 73, 74,000. But I think it's a case of, while we are below that, maybe we need to make a move back down towards this mispivot around 69,200, and that also coincide with a strong support, as well as S1, and then buyers could come in around that sort of area, and we make a move up towards 71,000. So the 71,400 is going to be quite crucial in the next couple of sessions, and then also that 69,200 in terms of solid support. Then we've just put into the 1 hour chart. Again, this 50 EMA and 50 EMA provides a great sort of indication in terms of buy and sell signals. Not to say it's going to work all the time, but at the moment it has been working out really, really nicely. Just a simple case of when there's a crossover, look to buy. Again, when there's a crossover back below, look to sell. Only if the 50 EMA start to cross back up above 50 EMA, might that indicate that buyers are back in charge, and then we could see a move to the upside. It is quite interesting that you can see this sort of pattern is the same. Gap down and then consolidation. We've got this gap down, consolidation, but your entry point would only be if you can start to see that'll give you added confirmation, a crossover of the 15 EMA on and the 50 EMA on the 1 hour chart. Otherwise, you can see this 7,500 is got a bigger head and shoulders. And if we continue to sort of trade below that, then maybe we head back down to that 69,200. There's a bit of a gap around the 68,500 sort of region. So quite critical in the next couple of days with regards to if bulls can pull up their socks and get this moving average to sort of base a bit more and then turn back up again. Another interesting thing is that notice the throwbacks. When you do get a sell signal, look how price it moves lower, and then there's always a throwback into the underside of the 50 EMA. So you don't necessarily need to chase any shorting action if you do get another, if there's a move to the upside and another crossover to the downside. It does tend to be a bit of a throwback, which provides a shorting opportunity before the next leg to the downside. So just be mindful of that. Then looking at the S&P 500 on an hourly chart, does seem like there's a bigger broadening diamond formation that could be brewing here. That ties in quite nicely with those wave 5s, with the seasonality, with the roadmaps, with everything. So this also could potentially be providing some sort of indication that a top formation could be brewing. Just to highlight, you can see over there's the diamond formation. Also 15 cross below the 50. Again, the diamond, but this reverse pattern to the upside. In the 15 crossing back above the 50, right in the buy. So if we do start to see the 15 cross below the 50 in the next couple of sessions or the next couple of weeks, that could indicate that price is starting to roll over. And this diamond formation that could be valid, and then it would potentially project onto sort of around 5,100. But this could take a couple of weeks, and like I keep on saying, maybe choppy action, and then only in July does this sort of pattern start to validate and provide the downside targets. Then the big one, the rand against, or the dollar against the rand. Last month we suggested that if you saw two closes below 1860, you'd see 1830. We did get the two closes, and we did get a move towards 1830. We got a near tag of 18. We suggested that 1885 was going to be a big level that month, and then it is quite interesting that those the two closes below 1860 got to the 1830, a near tag of 18. Bit of a shakeout, and then once 1830 was regained, quite interesting that this was a mispivot. Remember what I told you about the mispivot? That's when price fails to tag the yearly pivot, and then price raced all the way up towards the main pivot point, perfect tag of 1885, and that kept any further rand weakness pullback. We are now trading around 1890, so which is above that 1885, those prior highs, as well as the 61.8% retracement of that. So this 1885 is going to be a very, very crucial level in the next couple of days. If we get a couple of closes above that, that could potentially set the stage for sort of 1905, 1920, 1940, and who knows, maybe even 20. Not saying we're going there, because we have been in this broad range of sort of 1830 to 1920, and that's going to depend on what's going to happen in the next call it week or so, with regard to, if we can get some sort of a good outcome, but if there is some bad outcome, some sort of extreme move, we could see a move towards 20. Who knows? Can't rule it out. On the flip side, is good news, post tie-ups, maybe an extreme move towards 1740. Doesn't really look likely. The main pivot point comes in at 1855, so I think you have to have a bearish bias while this currency pair is above 1855. Only if it gets below 1855, might 1830, 18, and then the low levels come into play. Cycle point, turning points have worked out really, really well. So if you do see a sharp move either way, come the end of the month, just monitor, maybe the pivots and in the cycle point line up. And if you do see a reversal there, that could set the stage for some sort of turnaround. One thing that I have learned also the hard way with the rand is that if you chase extremes of moves in the rand, that can hurt you quite badly. So you don't want to be sort of rushing for the exit door and shorting the rand at an extreme, because it does tend to have quite nasty turnarounds. So just aware of that. So we'll look for a side turn around the 27th of June. Can't say if it'll be rand weakness or rand strength, but if there are big moves around that sort of time of the month, just be careful. There could be a step back move counter to what the prevailing trend is. Then the US dollar X, this also worked out quite nicely. We suggested that it looked like we were going to see some dollar weakness to creep in. It would take about 3 weeks based on symmetry, and it's exactly what did occur almost to the day. We got to move to this 104 target we suggested within the 3-week time frame. A bit of a bounce to the underside of the 50-day moving average. It does look like, provided 105 isn't overcome on the closing basis, there's potential further dollar weakness. Should, in theory, translate into rand strength, but that's not the case with the election shenanigans going on at the moment. But it does look like we should see further dollar weakness into the 103. If we get back up above 105, maybe there's a possibility of 106, but I doubt that. I think it's more a case of a further dollar weakness ahead, and then strong support should come in around the 102.70, 103 sort of area. In oil last month, we suggested this sort of pattern of bounce, or sorry, a move into the S2 in this main yearly pivot point, the 61.8% retracement area, a bit of a bounce, and then just the action. That's pretty much what did unfold. What is quite interesting now is you've got your 15 below your 50 indicating the trend is to the downside. We've also got a price that's fallen quite dramatically. 77 should contain selling, and maybe we see a bit of a bounce. That does look to be playing out at the moment. We do start to break 77. I think we get back towards 74, and maybe even lower towards the lows, not shown on this chart, around 71.60. If we do get towards 74, look for a reversal. I think that'll be an extreme, and we could get a sharp rally if we get down towards 74, and buyers are able to defend that sort of area. But overall, does seem like a case of short in the rally with maybe a bit of support coming around 77, maybe a move up towards 80.50, and sellers resurface again. Then some of the stock ideas from last month. We suggested that Pan-African was looking pretty good. Ideally, we would want to see a move down towards 560, which we got, and then we want to see a reversal before we'll see a move to the upside with target of $6, maybe even 640. But you can see that R1 resistance, pivot resistance, attracted sellers, bit of a reset, and then another move into the round figure of 6, and the R1. Then I kind of get the feeling that from here, it's just really a case of choppy action. And if this 5 EMA starts to close below the 15 EMA, that could indicate further weakness in the stock. So it's played out quite nicely. I wouldn't go and chase it any further now. In first rand, we're looking for a move into this main yearly point around 69. That worked out quite nicely. Got a bit of a sharp pullback based on the outcome of the elections and the uncertainty around it. We are continuing to see this move to the upside, and then another sharp move to the downside. If we do start to take out 63, then I think we're going to go and have a flush of 60 and 59, and maybe if the 63 area does break, then maybe this flush comes and be a case of waiting for the flush and then a regain of 60. Look to buy for another sharp move to the upside. I do think that the stock is going to be quite volatile in the next couple of months. So maybe also just drill into the hourly chart and monitor that 15 EMA and 50 MA. You might find you could get some trading opportunities there. In Grindrod, we said 1275 I think it was going to hold. That set up some nice higher targets, with our 3 targets being sort of 1350 and then 14 and sort of 1420, and that's played out really, really nicely with a strong move to the upside. Notice how when you get the R2 yearly and the R2 monthly, that when those coincide, it does tend to provide a degree of resistance, and it did so again this time. And still really a case of above 1350, buying the dips maybe so 1350 to 14 sort of range now. 1350 gives way back towards 1270 sort of area. So the ideas for June, very, very difficult because a lot of these charts today actually sort of were in no man's land, and it was a case of can really go either way. If you get an aggressive move, weaker in the rand based on the incorrect sort of coalition that the markets perceive, then a lot of the stocks are going to move lower, and then the currency sensors are going to move higher. And then if there is some sort of common sense that prevails, and you do see a positive outcome, which is looking a little bit less likely now, then you'd see a lot of the domestic stocks take off, and then the currency sensitive stocks go the other way. So it is on a bit of a knife edge at the moment. So take these stocks with a pinch of salt, but stock picks with a pinch of salt. But this is my best sort of guess. We've got this potential rights issue that's coming up in pick and pay. We have seen a sharp move to the upside. This 200-day moving average, if we do see further strength towards 28, you could probably look to nudge in some shorts, move back down towards 24, and then finally, should see some continued buying interest ahead of possible rights issue, and then maybe a reversal of this main pivot point, and you can maybe trade sort of 24 to 26 in the short term, and trade sort of $2 there. If you do see a break of this main pivot point, then maybe a bit of weakness. But I think generally speaking, it does look like we'll see some sort of 24 to 26. If that's breached, then maybe 28, and then that'll be a bit of an overshoot for maybe some sort of pullback as further information on the rights issue is announced. The NEPI, bit of a boring one really. A case of 15 is now above the 50, so the bulls seem to be taking charge here. Just a bit of a range between 128 and sort of 135. I think you can look to probably trade. Maybe if sort of gets up towards 136, might become a little bit rich, and maybe trade back down sort of 132. So maybe identify sort of 4 or 5 rand sort of ranges and try and trade the extreme of that range. The last one, sort of sticking my neck out here, has been very volatile. If you can get, this is Impala, and I've overlaid with the platinum price just to sort of see where things are at. But it does seem like a bit of stability is starting to creep in. Maybe if you get a close above this prior day's high, that could set the stage for a move into sort of $9,800. And if we see a reversal, there may be another leg to the downside. But this does look like it's starting to stabilize. Ideally, I would have wanted to see some sort of maybe further weakness into this sort of area and then stability for a bit of a bigger bounce. But it seems like maybe we're getting a bit of a bounce here, up towards maybe $100 and then maybe another leg. But if with today's trading action, if we don't see a close above the prior candle high and then price continue to move lower, then monitor for some sort of reversal around the 80 to 84 sort of region for maybe a bit of a bigger bounce to the upside. So just do a very quick review. S&P 500, the trend is back up, favoring bulls. However, I highlighted that some seasonality, the NASDAQ, the R1 resistance, as well as the Elliott wave on the S&P 500, as well as NVIDIA. The bulls are in charge, but as I said, there might be a possibility for a short-term top based on all the characteristics laid out. British market looks pretty good, still case of buy the dips. However, into that resistance identified. Anglos, there's possibility it looks to go and close that gap around 515, and then Naspers also looks like better buying opportunities are lower down, but there's possibility that we could see that fifth wave to the upside for another test of prior highs before sellers start to enter. Magnificent Seven, they made a bit of a comeback. We see some seasonal choppy action start to unfold there come sort of June and July. 71,400 on the top 40, that's going to be a very, very important level for the month of June. And then the Rand, 1855, have a bearish bias while we are above that level. 1885 is going to be quite crucial, especially the next couple of days. I mentioned this is a bearish bias for the Rand while above 1855. And that's despite my call for data weakness. So everything that really is going to hinge on what happens in the next week or so with the outcomes of the elections. And then the 27th of June, that's what we're also going to look at from a cycle turning point. As I mentioned, everything about the SA elections and what the outcomes, the final outcomes are going to be of that. Bull trend is intact on S&P 500, but we're going to start to see volatility in the months ahead. I've laid out that sort of roadmap with regards to the possibility of us pulling back to 5,000 on S&P 500, pull back into the 50-week moving average, and maybe that lays the platform for some sort of year-end rally. So we'll just keep an eye on that in the months ahead. But yeah, in summary, looks like momentum is still to the upside, but I think case of June providing a bit of a short-term top for the S&P 500, which could potentially spill over into world markets, and also resulting in NVIDIA probably coming off the boil, given the fact that we do have results behind us, and also that it has run extremely hard for the last couple of months. That's it for me. If there are any questions, you can post them into the comments box, and then we'll take a look at some charts and some levels on anything that you do want to discuss. Thanks.
Thanks very much for that, Andrew. Very insightful stuff, and good to see the trade ideas from May really taking shape. We do have a few questions. I'm sure some guys will jump in as well. Let's start with the first one. What are your thoughts on Bitcoin?
Okay, Bitcoin. I did do something, I think it was 3 months back, just in regards to a strategy on Bitcoin. And it actually is looking pretty good at the moment. I'm just going to quickly just take off this 200-day moving average and just add, just so I can show you exactly what the strategy involves. Okay, I'm just putting the 5 EMA on, so I've got the 5 EMA and the 15 EMA. So I'm just going to quickly just make that red. Okay, so what the strategy involves was every time you get this red line being the 5 EMA cross above the 15 EMA, that generates a buy signal. So based off of that, 66,000 would have sort of been the entry point. And you can see that while the 5 EMA is about the 15, you want to remain long. So you'd still be long from 66,000. It does look like we're going to see this break of 72,000, and then that could pave the way for move to 74, and who knows, maybe even 81. We do have an inverted head and shoulders here. If we project that up, we can see that would come in at sort of 90,000. So technically, it actually does look pretty good. Only if the 5 EMA started to trade below the 15 or 65,500, call it, where the main monthly pivot point was to give away. Conveniently, that's also where the 50-day moving average comes in. I think that would start to negate the possibility of any follow through. But for now, it does look like a breakout is imminent and with higher targets.
Perfect. Thank you. We got another question here. Are we able to see the Impala price? Sorry, the Impala with the ZAR platinum price overlay, so not the USD price.
Okay, we can do that. I think it's NGPLT. Yep. I'll just do it as price scale like that. And there we can see it. So let's just, you can see it pretty much has followed the Rand price of platinum. And you can see that we are perking up a little bit. You know, we are trading 91. So it does sort of look like, you know, the thesis of the close below, sorry, above the price session high look to be unfolding. So it does sort of look like we want to maybe get moving towards our main pivot point in that target of sort of $100. But yeah, maybe this is a precursor that the Rand price is going to go higher. Yeah, to me it does look interesting, and it looks like quite a nice long at the moment. A quick long, I wouldn't hang around too long, but your risk to reward does look pretty good.
Sure. Perfect. Thanks for that. We've got another one here. Can we have the charts and views for gold, please? Just while you're loading that up, I know we don't have as many questions in the box. If guys don't know how to ask questions on the webinar series, there should be a questions tab where you should be able to ask a question. Otherwise, you can put it in the chat. I'll also find it there. But yeah, go for it there, Andrew.
Okay, great. Yeah, so gold, I think, just really is in a consolidation phase. Still looks like pretty rock solid around the sorry, just take that away. Pretty rock solid around the 2300 to 2320, provided that holds. Still looks like a case of perhaps another move back up towards 2400, 2430. Can't really fault it, making another higher low, and it's made a higher high. So maybe a consolidation, but still well above 2320. Case of buy the dips, but I can't really see us sort of like shooting aggressively higher. I think a case of just consolidating these gains, given the fact that we have seen, you know, strong run up in, you know, March and April. We probably need to see some further consolidation. Maybe you sort of see 1, 2, 3, 4. Any breakout might follow through, but you know, maybe some good consolidation between sort of 2330 and 2420. That would bode well heading into the next couple of months.
Okay, great. Thank you very much. Got no other questions at the moment. It seems like you've answered them already in your presentation, but yeah, we can hold on a few months. Yeah, let's have a look at the top 40.
Right. So now we can see that we are starting to perk up, trading 71,100 odd. Here's a 71,400 that I was talking about. That seems for the moment there is support coming around 7,400, 7,500. Provided that holds, maybe we have a crack at 71,400. We start to close above that, and maybe even at 15 EMA. Then could argue that this could be a bit of a bullish type. It can be a flag, but I'd maybe say be a bit more conservative and say it's a wedge for us to move back up towards 73. So quite crucial at 71,400.
All right, great. We do have another question here. Can we have a look at SPP and Capitec, please?
Okay. Okay, SPAR. I think this sort of typifies where things are at with a lot of these stocks, and specifically the domestic stocks. You can sort of make a case both ways. So you could say, well, 15 is above 50, so the trend is still the upside, and momentum still is to the upside. You could sort of say, well, that's pretty good in terms of a flag, but then you could say, well, there's also this head and shoulders here. So, and then we're below the main pivot point. So it's a case of, well, I can make a bearish case for it, I can make a bullish case for it. I would say, well, the missed pivot down, and we're probably going down towards 94. But then at the same time, we're holding the 50-day moving average. So, like, which is it? And I think that was sort of the dichotomy I had in terms of trying to put forward stock picks, because you could actually sort of argue both ways. There's this uptrend. I suppose the balance of probability would suggest that benefit of the doubt needs to go to the bulls here, but a bounce, where does it sort of go to? Does it go to sort of this pivot at 103, or does it sort of just chop around? So very, very tough, this one. I'd be trying to sort of just leave it if I really had to. I'd be a buyer for a move to 103, and that would be it. But I think just some choppy action here. Then Capitec.
Yep. And then we do have two more after Capitec as well.
Okay. Capitec, similar sort of story here. And this one, I was contemplating sort of putting it in and saying maybe what we need to do is actually go and have a move down sort of the 1971 sort of region, or this S2. But then you sort of are going against the general momentum, and the stock making higher highs and higher lows, and also defending sort of the 22,140 sort of region. So it was like, do you short this? Probably not. If you're going long, there's a bit of resistance up here at this sort of region. What do you really do with it? And then you probably find it's just going to chop around like this. So again, a bit of a tough one, and this 50-day has tended to provide good support. So yeah, I think at best, this one again is going to probably just chop around, and has really nothing for the bulls or the bears alike. That'd be my best guess.
Sure. Can we also have a look at Vodacom while we're on the SA stocks?
Okay. Okay, Vodacom. I mean, this is another stock that really just, once it makes a move, then it just goes into this choppy sort of sideways trading action. The fact that this 50-day moving average has sort of flattened out makes me think that we're going to continue to see further choppy action. Yes, it is above the main pivot point, giving the bulls a slight advantage, but maybe, at best sort of overshoots to 90 can be bought, to maybe overshoots to 100 can be sold. But it's not really that exciting. You can see it's just sort of like bumbling along. I mean, the fact that it's only up 0.14% today sort of highlights exactly that. So in terms of volatility, I think you're going to get more bang for your buck out of something like MTN rather than Vodacom. This one is a bit of a sleeper, so to speak.
Sure. Great. If we do have time, there are two more. The one is, can we look at the silver chart, please, Andrew?
Okay. Okay, so silver. Silver is looking pretty good. You can see these consolidations, have resulted in, move to the upside. And I wonder if we aren't seeing a similar sort of thing again. we have something sort of like that. And another, we've reversed up off the main pivot point, and maybe another move back up towards $32. And if that's over maybe 33, yeah, I mean, provided these lows here, 29.40 hold, it does look like another move up towards 32, 32.20 could be in order. We've got an uptrend still looking pretty good. Yeah, that does look like maybe another move to the upside there.
Sure. And then last question is, do you have any view on copper being the metal commodity of the moment? And then linked to this, what is your view on Glencore?
Okay. Yeah, obviously there was a lot of talk with regards to, BHP looking to for more supply of copper in terms of taking out Anglos, and I think that sort of coincided with copper peaking. Now we've seen a pullback, but it does look like it's found support at the 50-day moving average, but below the main pivot point. So maybe a case of a mispivot down here. So choppy action. Maybe we go tag that main point. 460 might be sort of a round figure that it holds. But I just think that we're going to sort of chop around now. I don't really see us, moving aggressively higher unless we can take out 475, and then maybe that could result in this being a bit of a bullish wedge pattern to take us higher. But my sort of gut feel is a further consolidation in copper. And if we look at Glencore, let's quickly go here. Let's just see. There we go. And Glencore does look pretty good here. I just wonder, that's a longer term. The next sort of resistance is maybe sort of 1190. Let's just zoom in a bit. Yeah, so sort of 116, somewhere around there. Looks like breakout is around the corner, maybe for a move up towards here. Does look pretty good, provided this sort of the main pivot point around here holds. But yeah, I mean, you could also argue, I suppose, this is a bit of a bull flag for sort of higher prices. So yeah, other dips. 5 is above the 15, 15 is above the 50. Yeah, from a technical perspective, it does look like there will be a breakout here, and is probably looking the best out of the diversified miners.
Sure. Great. Thank you very much for that, Andrea. I know we have ran over time, so much appreciated for staying extra there. And yeah, no more questions. So thanks very much for everyone listening. Until next month for the July trading outlook. So thanks again. We'll chat to you all soon. Happy trading.
Excellent. Thanks very much. Cheers, everyone.